Peter Lynch, what was the most scared you ever were in your career? He says, 87 wasn't that scary because I concentrate on fundamentals. I call up companies. I look at their balance sheet. I look at their business. I look at the environment. The decline was kind of scary, and you'd tell yourself, will this infect the basic consumer? Will this drop make people stop buying cars or stop buying houses, appliances, stop going to restaurants? And you worried about that. The reality, in 1987, the decline was nothing like 1990. In 1990, in my 30 years of watching stocks very carefully, was by far the scariest period. Then they go on to say, what was so scary about 1990? I was not in the stock market in 1990. If you were, let me know in the comment section. But he goes on to explain 1990. Well, 1990, there was a situation where I think it's almost exactly 6 years ago. So this interview was 1996. In the summer of 1990, the market's around 3,000. Economy's doing all right, and Saddam Hussein decides to walk in and invade Kuwait. So we have invasion of Kuwait, and President Bush sends 500,000 troops to Saudi to protect Saudi Arabia. There's a very big concern about, are we going to have another Vietnam War? A lot of serious people have said this is going to be a terrible war. Iraq has the fourth largest army in the world. They fought really well against Iran. These people are tough. This is going to be a long, awful thing. So people were very concerned about that. But in addition, we had a very major banking crisis in the U.S. All the major New York City banks, Bank of America, the real cornerstone of this country, were really in trouble. And this is a lot different than if W.T. Grant went under or Penn Central went under. Banking is really tight. And you had to hope that the banking system would hold together and that the Federal Reserve understood that Citicorp, Chase, chemical manufacturers, Hanover, Bank of America were very important to this country and that they would survive. And then we had, let me scroll down for you guys. And then we had a recession. Unlike 87, you called companies in 1990, you call companies and they say, gee, our business is starting to slip. Inventories are starting to pile up. We're not doing that well, man. So you really, at that point in time, you had to believe the whole thing would hold together and that we wouldn't have a major war. You really had to have faith in the future of this country in 1990. In 87, the fundamentals were terrific, and it was like one of those 3-for-2 sales at Kmart. Things were marked down. It was the same story. So in 87, we had no reason for the stocks to go down other than they got too hot too quickly. But in 1990, the beginning of the Iraq War, and then also all of this banking crisis. He doesn't go into talk about much about why the banking crisis started, but those were probably the two big causes for the market being really scary. Tell a story about your wife stumbling on a big stock for you in the supermarket. So this one's a little bit longer, but it's fascinating because there's a little bit to learn from it, I think, for us. Thank you, AC. So he says, I had great luck with a company called Hanes. Probably all of you know Hanes, like underwear, t-shirts, tank tops and stuff like that. They test marketed a product called Legs in Boston, and I think in Columbus, maybe 3 or 4 markets. And his wife, Carolyn, bought this product home, and she was buying, and she said, it's great. I think it was stockings or like pantyhose or something like that. She's almost got a black belt in shopping. She's a very good shopper. If we hadn't had these 3 kids, she now, when Beth finally goes off to college, I think we'll be able to resume her training. But she's a very good shopper, and she would buy these things. She said they're really great. And I did a little bit of research. I found out the average woman goes to the supermarket or drugstore once a week. And they go to a women's specialty store or department store once every 6 weeks. And all the good hosiery, all the good pantyhose is being sold in department stores. They were selling junk in supermarkets. They were selling junk in the drugstores. So this company came up with a product. They jackrobbed it. They had all the sizes, all the fits, and they never advertised price. They just advertised, this fits, you'll enjoy it. And it was a huge success, and it became my biggest position. And I always worried somebody'd come out with a competitive product. And about a year and a half, they're on the market. Another large company called Kaiser Roth came out with a product called No Nonsense. They put it right next to legs in the supermarket, right next to legs in the drugstore. I said, wow, I got to figure this one out. So I remember I bought 48 different pairs at the supermarket, colors, shapes, and sizes. They must have wondered what kind of house I had at home when I got to the register. They just let me buy it. So I brought it into the office. I gave it to everybody. I said, try this out and come back and see what's the story with no nonsense. And people came back to me in a couple weeks and said, it's not as good. That's what fundamental research is. So I held on to Hanes, and it was a huge stock, and it was bought out by Consolidated Foods, which is now called Sara Lee. And it's been a great division of that company. It might have been a 30-bagger instead of a 10-bagger if it hadn't been bought out. So this is one of the interesting things that comes up a lot of times, even on YouTube. You have big names, big stock investors like Jeremy. And Jeremy Financial Education, I think his name's Jeremy Lefevre or something like that. But he pretty much, for the most part, only invests in stocks that he can do this with. He can go down to Planet 13 and, have a meal there. Or he can go down to, what's that one casino he always talks about? That really luxurious casino. And a lot of his stock, or Walgreens and stuff, a lot of his stocks that he loves are ones that he can do this. He can try on the pantyhose, so to speak. But then you have other investors who are straight up, just look at the numbers, just look at the P ratios and the financial analytics and stuff like that. And if the numbers are good, I buy it. And then when they suck, I sell it, kind of thing. But when we look at people like Peter Lynch, and I think Buffett's a little bit like this too, like the fundamental research of just knowing it's a good product and knowing that, wow, this competitor, no nonsense, yeah, it's everywhere, but it doesn't, the actual quality of it isn't going to hold a candle to the one put out by Hanes, legs. And so they knew they didn't have to be worried they didn't have to feel threatened by this competition. They didn't need to maybe, grab some Kaiser Roth stock or, ease out of Hanes or anything like that. They're just like, nope, we have Hanes and we're good to go because the competition sucks. As far as, these offerings that were available in the drugstore. So that's really interesting for me, and for me, I like to do that. And I tend to be more passionate about stocks that I can, that are tangible to me. But at the same time, looking at stocks like Nokia or Palantir, I can't, use Palantir, but I'm still excited about it. So interesting kind of perspective for me to consider. What do you guys think about that? Oh yeah. Lonely Otaku, what's up? He was saying the luxury hotel that Jeremy likes is the Wynn Resorts, which I've done a couple of videos on, and actually is a pretty neat company with some of the licensing moats that they have, especially in Macau. Because there's like it's basically impossible to get a casino license in Macau because it's so strictly regulated, but they have one. So, or two now, I think. So that's kind of a cool company, but that's very much how Jeremy does it. What do you guys think about that? Let me know your thoughts.